In this presentation, we will work a problem related to investment pool trust fund, a form of fiduciary governmental fund. We're going to have the information on the left side. We're going to put that into the blue area on the right side. We will journalize the journal entries here. We'll then post those transactions, those journal entries, to a trial balance worksheet, the trial balance worksheet being in order: asset accounts in green, the liability accounts in orange, the light blue being what would be the equity accounts if we were in a for-profit organization, them being the net position here, and the dark blue, what would be income statement accounts if we were in a for-profit organization. Temporary accounts, those accounts that will close out to what would be the equity section, in this case, to the net position. We'll have the similar transactions or similar process for the general fund, schools, and a township. So we're going to go through a couple different worksheets so we can see how this plays out. We have an investment pool, and so this is going to be an investment pool trust fund, which is going to basically be a trust fund holding the investment funds that are due to these different locations: the general fund, schools, and the township. So this is going to be the total. We're going to say year one, these were the investments. Year two, the investment pool was started. So now we're going to put this into the investment pool, which is going to handle the investments and then have to basically distribute them in some way, if necessary, at the point of a desired distribution to the general fund, the schools, the township. So first we have the investment, the U.S. Treasury bonds, and certificate of deposits in the amount of the $950,000, the $8,553,000, that then adding up to the $9,503,000. So here's the $9,503,000, and that is broken out between, that total investment is broken out between the general fund, the schools, the township. So we're pooling this money together: general fund, schools, township, the $951,000, the $4,466,000, the $4,086,000, adding up to the $9,505,000, investing that then in our investment pool in the form of U.S. Treasury Notes, $950,000, and certificate of deposits, $8,553,000. Let's record that then in our investment pool trust fund. We're going to say we have our investments now. So the investments are going to be an asset of the U.S. Treasury and the asset of the certificate of the deposit, and we put into the U.S. Treasury Notes the amount of $950,000, and we put into the certificate of deposit the amount of $8,553,000. And then who is that owed to? It's going to be owed to these individuals, right? We got the general fund, the school district, and the township. The general fund is going to be an inter-fund transaction. So when we think about the general fund, we're going to say that this is going to be equal to the due to general fund. It's going to be a liability type of account or an inter-fund type of account. The other two are going to be outside of this government. So we're going to say that we have the township, the school, and the township then. And you would think that you would put them into liability accounts as well, but we're actually going to be recording what would be similar to revenue in those accounts. We're going to be recording the activity, in essence, in activity type of accounts, what would be similar to income statement accounts. That's going to be the additions, the deposit for the investment for the schools, and then the additions for the deposit and investment for the township. So if we were to pick this information up, then we're going to say this will be negative or a credit of the $951 to the general fund, and then we have the schools, and we have the township. Let's record this out. We're going to record the U.S. Treasury Notes first. So that's going to be up top. That's in cell M4, where we will say equals and scroll over to that 950, increasing that amount. Then we have the certificate of deposit in cell M5, where we say equals and point to that $8,553,000, increasing it in the debit direction. Then we have the due to the general fund, it being a liability account in M8, equals, and we'll point to that 951. There is that amount. And then we have the additions deposit in the pooled investment for the schools and the township. So let's do the schools first, of course. That's going to be down here, and it's going to be increasing like a revenue account. So we're increasing that temporary account, and then we'll do the last one for the township in a similar fashion. That's going to be down here in M13, equals, and we'll point to that 4,086,000. So there we have that. That puts us back in balance. And of course, we have the increases in the temporary accounts down below. Now we're going to consider the general fund. So if we go to the right, we're going to say, okay, now we're going to take a look at the general fund. The general fund, we're going to say that there's an equity in pooled investments. So equity in pooled investments is going to be an asset. That's the amount that's going into the pool for our investments. And that's going to be equal to the amount related to the general fund, the 951, because we started this in year 2. And the original investment, so the investment we started with here, you'll see that was 900. So in other words, we had 900,000 on the books last year. We're investing into the pool this year, 951. Why is there a difference? Because there was a gain. So it went up in value. So we're going to have to record that gain. So this investment then is going to be going down by that 900,000. And then we're going to have a difference, which is the gain, which is the negative sum. This will be a plug formula of the 51. And that's going to be revenue, because that's our earnings on the investments. That's revenue change in the fair value, we're going to call it. So there we have that. Let's record this out. So we're going to go to the equity first. We'll be up top in cell W3 equals, and we'll pick up that 951,000. Then we're going to go to the investments. So investments is in W4 equals, and we'll pick up that 900,000, bringing it down to 0. And then we've got the income. The income is going to be down in cell W11 equals, and we'll pick up that 51,000. Let's make this a little bit shorter. And then let's scroll over and we'll do the same process to our other funds we have, or the schools. So now we have the schools. Same process here. They had this 4,022,000. They then took that money and they put it into the investment. So we're going to say that now we have an investment in the equity pooled amount, and it's going to be for whatever it was in year 2. I'm going to say equals and scroll all the way back to the data. We're going to pick up the schools. That's the 4,466,000. And it was on the books for 4,220,000. So that's what the investment is. That's the difference between the two. We're going to take the investment off the books. That's going to be negative of that amount. And then the difference between the two is, once again, the gain. So we're going to say negative sum for the gain. And that's going to be revenue. So that's going to be a revenue change in the fair value. If we record this out, then we're going to say we have the equity. So we'll go up top to the equity equals, and that's going to increase the asset. Then this investment's going to go down because we took it out of there and we put it into the pooled investments. And then we have the revenue. So we'll go down to the revenue. It's going to go up in the credit direction. So we'll increase the revenue. So there we have that. Then we'll go and we'll do the same process for the township. Same process for the township. We're going to say that we have an investment going up. Equity in pooled investments going up. That's going to be going up by the amount in our tables. We're going to say this, scroll back to the year 2, and that's going to be in the township. And then the other side is going to be investments. So investments is going to be the other side, and that's of course this investment going down. So negative of that amount. And then the difference is going to be the gain, or in this case, the loss. So we have a loss here, negative sum of these two, and we're going to have loss. Now we're going to put it in the same account, revenues here it says, but it's really a loss, so it should be revenues or loss. But we're going to put it to that same account here, same process, but we have a loss at this point. And if we record this out, we're going to say that we have the equity going up, and then of course, once again, the investment going down. And then we have the loss on what would be like the income statement or temporary accounts. So there is that. That puts us back in balance. Let's go back to the left and see what we have next. So if we go all the way back, we're now on number 2. We'll first go ahead and highlight the top one and say that we have completed that. So I'm going to select it. We'll make it green then. And then number 2 says we have the township withholdings of this amount, and it's taken from the certificate of deposit. So we're going to, now the township is taking money out. Before that happened, so they're going to take money out, but there was earnings before that happened. So we're going to have to say, all right, well, they need to take this money out But before we can take it out, we got to recognize the fact that there's earnings in it. So we're going to first recognize the earnings, allocate out those earnings, and then process the distribution of the $3 million to the township that wants their money back out of the pooled trust fund. So we're going to say that the U.S. Treasury bills are going up in value by this 41,000. So they're going to go up here by the 41. So this is going to be equal to the 41, and same kind of process we had before. The accounts are going to be due to the general fund, and then the outside areas are going to be the additions for the schools and additions for the investment township. Now we're going to have to track this information in a table to try to figure out, well, how much of that 41 do we need to allocate out to general fund, schools, township? To do that, we'll do a ratio analysis. As we've seen in the past, we're going to go all the way to the right till we find our table over here to do our ratio analysis. So here's our table we're going to use for the ratio analysis. We're going to take the value of these investments. We're going to take the related ratios, use that to allocate out the gain in accordance with those ratios. So within AU3, I'm going to say equals, and we're going to go all the way back to the left to pick up the number. And we want to pick up these year 2 numbers. I'm going to say enter, and then I'm going to autofill down to pick up the other 2. So I'm going to say enter, and then put our cursor on that one and autofill down to pick up the other 2. And then we'll sum this up. So equals the sum of these ones. And there we have that. All right, and then we're going to take the percentages. So the percentages are going to be the value divided by the total. So it's always going to be the value over the total. This equals the value for the general fund over the total for the general fund, 10%. This equals the value for the schools divided by the total, not for the schools or general fund, but the total for all 3 of them. And that's 47%. And these could be rounded. Notice we're in Excel, so note it's actually it could have rounding, but be aware of that. So then this is going to be the divided by the total. So there we have that. And if we sum this up, then we're at 100%. And if there is rounding, note it doesn't really matter in Excel. You just won't be able to see it here. But Excel will take whatever the full number is and do the calculation, and it will then add up to 100%. And so we will then be okay. We're going to then multiply that times the gain, which was 41,000. I'm just going to take that all the way down, the 41,000. And then the allocation of that 41,000 is going to be equal to 10% of times the 41,000 to the general fund equals 47% of times the 41% to the schools equals 43% times the 41,000 to the township. And if we add those up, summing those up, that should then add back up to the 41,000. So there we have that. So our totals then to these groups are going to be the general fund will be the 951,000 plus the allocation. Then we have the schools is going to be the 4,466,000 plus the allocation. Then we have the township 4,086,000 plus the allocation. If we sum those up, we get back to the 9,544,000. So then we're going to take these is going to be the way we allocate it. So these are the numbers we're going to use then within our journal entry to make our allocation. So let's go all the way back to the left. So I'm holding down the left arrow. We're going all the way back to the left. And we're going to pick up that column, those numbers, in starting with I-10. So within I-10, I'm going to say negative of, and then go all the way back to the right. And we want to pick up the general fund, and we're picking up this 4,103. I'm going to say enter, then use the autofill to go down, and that'll pick up the 19,268 and the 17,629. So let's do that, enter, and then we'll pick up that number, and we will autofill down by putting our cursor on the autofill and dragging down to pick up the autofill. If we highlight those numbers, then we're at the 41,000. Obviously, the debits equaling the credits. Let's post that out and go to the next piece. So we have the U.S. Treasury Notes. We're going to scroll over and say that's going to be in cell M4. Something's in it. So we're going to say F2 plus F2. Scroll over and pick up that 41,000, and that's going to increase. Then we have due to the general fund. So here's due to the general fund. That is in M8, where we will say F2 plus F2. Pick up that 4103, enter. Then we have the deposit in the schools. That's down below. That's here in M12. F2 plus F2, 19,268, and enter. Then we have the township. So we're going to go to the township. That's in M13. F2 plus F2, pick up that 17,629 and enter. So there we have that, putting us back in balance. So now that we've recorded that, we're going to basically take the money out of the CD and we're going to put it into cash so that we can then distribute it. So we need to take the money out of the investment. So we have it's in the certificate of deposit. We got to decrease this, increase cash, so that we can then decrease cash and pay it out. So we got to take it out of the CD, in other words. So we're going to say cash is going to be increasing. We're going to increase cash because we're going to take it out of the certificate of deposit, and the amount is going to be equal to that 3,112,000. There's the debit and credit. So we have a debit to cash. So we'll scroll back up and we'll pick that up. That's going to be in cell M3 equals, and we'll pick up the cash. Then we've got the certificate of deposit. So the certificate of deposit is in cell M5. We're going to say F2 plus F2. Scroll back down and we want to pick up the credit and enter. So there we have that, and it puts us back in balance. And then we could take that, once we have it in the cash, we can now take the cash and distribute it to the investment pool or to the township. So obviously there then the cash is now going to be going down. We're going to decrease cash with a credit, and the debit is going to be called, we're going to call the debit deduction withdrawal from the pooled investment for the township. So we're going to put it into the basically a temporary type of account looking or working in a similar fashion as an expense. And that's going to be once again for the same amount. And so we'll record this out. So within the deduction withholding, we've got M14 equals, and we'll pick up the debit, and then cash will be up top. So cash is going to be up in M3. Something's in it. So we're going to say F2 plus F2. Scroll back down, and we will then pick up the credit. So there it is, and we're back in balance once again. So we're going to make number 2 green then. I'm going to select number 2, and we're going to say that, well, let's make the item green. And so there we have that. And then number 3 says we have interest on the Treasury note of $71,000. So we're going to record the interest earned. So let's do that. That means that cash is going to go up because we're going to say that we have interest earned on our Treasury note. And then we have undistributed earnings on pooled investments. And be similar to like an income statement type account or revenue type account, or act as a revenue type of account, a temporary type of account here. And so that's going to be the credit. So if we record this out, then we're going to say we have cash going up. So cash is increasing. That's going to be in cell M3. Something's in it. So I'm going to say F2 plus F2. Scroll back down. Pick up the cash increase of the 71,000. And then we're going to have the undistributed earnings and the pooled investments. That's going to be in M11, where we will say equals, and we will scroll down and pick up that 71,000. So there we have the increase there. Then we have the CDs, our other investment that has interest of 49,000. So similar process there. We're going to say here though, the debit's going to be accrued interest receivable. Accrued interest receivable. So we haven't got it yet. And then we're going to say that the other side is going to be, once again, the undistributed earnings on pooled investments. Similar to a income statement or revenue type of account. That's for the 49,000. So accrued interest, and so we'll record this, the asset up top. So we're scrolling up top. We're going to record the accrued interest receivable equals, and we'll pick up that 49,000, and then we have the undistributed earnings pooled investments in M11. Something's in it, so we're going to say F2 plus F2. Scroll back down and pick up that 49,000. So there's that. That puts us, of course, back in balance once again. Now what we want to do is distribute those earnings. So we've got the interest now, and we're going to distribute the earnings. That adds up to, if we sum those up, the 120,000 that we would like to distribute. and we need to distribute them to our three areas: the general fund, the schools, and the township. So first, the debit then is going to look like this. We're going to have the debit to the undistributed earnings. So debit undistributed earnings. So it's basically acting as a clearing account now, because it's going to go back down by, I could take equals the sum of these two numbers, the interest earnings in the two types of investments. And then the other side, one is going to go to the kind of liability type of account, intra-fund type of account for the general fund. And then we have the additions for the deposit in pooled investment for the schools, and the additions deposit for schools investment in the townships. So those are going to be the items affected. In essence, moving it out of the clearing account here to similar to the liability account here, and then basically to the other two accounts that are going to act like a revenue or temporary type of accounts. Of course, the question now is how much do we allocate to these three areas? To look at that, we're going to have to go back to our tables. We're going to go all the way to the right, back to our tables, so we can do another kind of ratio analysis. So to think about this, we want to say, okay, here's our totals where we left off last time. This is where we left off. We had to do this calculation in order to pay out the township. So we had these totals representing the increase of the $41,000 because we needed to be at this point in time to pay out the township. And we're going to sum this up. There we have that. Then we paid the township. They paid out $3,112,000. That's how much was then paid out to the township. So that means that if we have this value minus this column and autofill that down, this is what we have here. And obviously the township is the only column affected, and it's going to be decreased by the amount that was paid out. So if we then sum up the data at this point equals the sum, here are our values. So we'll now create a new ratio, a new percentage ratio based on these values in order to determine how much of the 120 we're going to allocate to general fund, schools, and township. To do that, we're going to say this equals this amount in the general fund divided by the total. This equals the schools divided by the total. And this equals the township divided by the total. And then we'll sum that up. That should add up to, of course, 100%. So there's the 100%. We're going to allocate out now 120,000. So 120,000, that's going to be the allocation. And now we're simply going to take 15% equals 15% of times 120,000. This equals 70% of times 120,000. This equals 15% of times 120,000. If we add that up, then of course that sums up to 120,000. Okay, so here's our allocation. So we're going to allocate general fund, school district, township in accordance with these allocation numbers. So I'm going to go all the way back to the left again. We go all the way back to the left, scroll back down, and we're going to pick up our allocation. That's going to be in cell I-27. And I'm just going to say negative and then go pick up those numbers. So I'm going to say negative, going to go all the way to the right and pick up those numbers on our table way over here. Starting with the 17,819, I'm going to say enter, then autofill down to pick up the other two numbers. So I'm going to say enter, and then we'll just autofill down to pick up the other two. And there we have it. So that's going to be our transaction. We'll record this out then. So we're going to start with the unrestricted earnings pooled investment. So that's going to be in cell M11, where we will say F2 plus F2. Scroll back down, and we want to pick up that 120. So that's going to make it go down to 0. That's kind of like our clearing account. Then we're going to put the amount to the general fund. That's in basically similar to a payable account. We're going to say F2 plus F2 in M8. Scroll back down and pick up the 17,819. And then we are going to pick up the additions. So that's going to be up top. So we want this item for the schools. We are in M12, F2 plus F2. Scroll back down. We want that 83,680. Then we have the additions for the township. So we're going to scroll back up and we want to pick that up in M13 by saying F2 plus F2. Scroll back down and pick up that 18,501 and enter. And there's that. That should put us back in balance. Now we're going to scroll over to the general fund and record this transaction. So we are in the general fund, and we're going to record the increase in value now. So what we're going to say is the equity and the pooled investments is going to be increasing. That's going to be the investments in the pooled investments. We're in the general fund now. And then the other side is going to be revenue. So we have the revenue is going to be increasing. This is revenue for the investment earnings. So this is investment earning revenue as opposed to basically just the change in the value of the investment. So we put the investment in the books at the value at the point in time we put the investment in the onto the pooled investment. Now we're recording the actual earnings. This is the investment earnings, basically the interest on it. So the investment earnings, I'm going to say, where's that number coming from? It's going to come from our table. So we're going to say equals, and we're going to go all the way back to the table. And we're going to pick up that 17,819 and enter. So there's the debit and the credit. So we got the equity in the pooled investment. That's going to be up top in W3. So we're going to say F2 plus F2. We'll pick up that 17,819. Then we're in the revenue. So the revenue is going to be down here in W12 equals, and we'll pick up that 17,819 credit. Then that'll put us back in balance. Then we're going to scroll over and we'll do the same thing for the schools. So now we're in column AA, same process. We're going to say, all right, the equity pooled investment is going to be increasing, and the other side is going to be revenue. So we have investment earnings, and the amount's going to be from our table. So I'm going to say equals and scroll over to our table. And that's going to be the 83,680. That's the debit and the credit. So we're going to say the equity and pooled investments up top. That's in AG3, where we say F2 plus F2, and we pick up that 83,680. Then we have the revenue, so that's going to be down in AG12 equals, and that's the 83,680 credit. So there we have that amount, and we'll do this once again for the township, where we will be saying that the equity is going to be increasing, equity in the pooled investment, the other side being revenue. Investment earnings, and here we have this equal to the 18,501, and then the credit. So the equity, we're going to go up top, is in AQ4. We're going to say F2 plus F2, pick up that 18,501, then the revenue down below. So that's going to be equal to the credit, 18,501. Now, the township also had the money that was withheld, was taken out. So that's going to be, the cash is going to be going into the township for the amount that was taken out of the pooled investment. That's equal to cash increasing. And the other side is going to go to equity in the pooled investment. In other words, they took money out of the pooled investments, and it's going to go back into cash. And the amount was for, and we're picking this up from the table, this withholding, the 3,112,000. So there's the debit and the credit. So let's record that. We're going to go to cash first. Cash is going to be up top in AQ3 equals the 3,112,000. Then the equity in the investments. So we have the equity in the investment. We're going to say F2 plus F2, and we'll pick up that 3,112,000 there. There we have it. If we just review the data, if we scroll back to the right, here's the investment pool. Here's the trial balance investment pool. Here's the general fund, the trial balance for the general fund, the schools, trial balance for the schools, and the township, trial balance for the township, as well as the tables that are being used.